Is still with us on Reporter's Diary. In May of 2018, the government had sought public comments on the revised electricity tariff policy. Today, we learn from sources that the Power Ministry has finalized a cabinet note which has been floated for comments from related ministries. The new policy essentially bats for 24/7 quality power to consumers, smart metering and subsidy via direct benefit transfer, to name a few. Anshu Sharma is here with the details. Anshu, what are the salient features of this policy and by when is it applicable?
Some of the highlights of the tariff policy are that there will be penalties on DISCOM if it fails to provide 24/7 quality power supply. It has also set a target of March 2019 specifically for supplying 24/7 power supply from the DISCOMs to consumers. If the DISCOM fails to provide standard service for electricity, DISCOMs will be liable to compensate consumers. The new tariff policy also envisages that DISCOMs will not be able to pass on the losses to the consumers as and when the tariff is being looked at by the regulatory commissions if AT&C losses are above 15% beyond March 2019. So from April 2019, none of the losses on account of AT&C losses, which is aggregate technical and commercial losses, will be passed on to the consumers. It also envisages a reduction of AT&C losses to 12% in 3 years from achieving 15% of AT&C losses. That's a big target, considering that most of the states currently have AT&C losses beyond 20%. Apart from this, subsidy on account of electricity will have to be transferred directly to a beneficiary by the states which are providing subsidy. The idea is to implement DBT or direct benefit transfer within 3 years of policy implementation. Now, the other big area of focus is to implement smart metering, make it prepaid and easy for consumers to pay, and improve billing collection for the DISCOMs. The new tariff policy also pushes for simplification of tariff categories and timely payment to the power generating companies. Now, we'll have to wait and watch out as to when Cabinet takes this tariff policy for consideration. Back to you.
Right, Anshu, thank you so much for those details. Now, the shares of Jet Airways have been in a free fall since the start of this week. The shares have fallen as much as 14% this week. It all started from the 31st of December with the airline informing the exchanges that they had defaulted on loan repayments. This has now led to investors questioning the company's ability to raise funds. The airline urgently needs funds infusion to address liquidity concerns. Sonal Sachdev joins us now with more details. Sonal, take us through the key updates surrounding Jet Airways.
Jet presently has trade payables as of September end quarter of about 7,500 crore, which is about 1.23 into its revenues in the quarter. What this basically means is that it will take Jet about 3 to 4 months to pay off the outstanding payables without paying for anything else. Fuel prices have come down, and that's a positive for Jet, but it doesn't move the needle enough for it to get enough funds to pay for its dues. Even after adjusting for the fuel prices, Jet in the second quarter would have ended up with a net fund outflow of about 400 crore. Interestingly, with this in mind, the liquidity position, the asset liability issue, if you look at the long-term sort of liabilities as of end of the last quarter, and the more liquid current assets, we end up with a net liability position of about 14,000 crore. ICRA, which is the rating agency of Jet, had in December sort of reduced the rating of Jet Airways to C from B, and soon thereafter, after the default, ICRA reduced the rating further to D, which is virtually sort of junk status. Liquidity seems to be at the core of the problem, because if you throw some cash at Jet, and Jet tightens its expenses a little, it can come quickly back into profitability.
All right, Sonal, thank you so much for those details. And in national news, massive protests continue across Kerala 2 days after 2 women of menstruating age made history by entering the Sabrimala temple. Around 1,400 people have been arrested across the state and 700 have been taken into preventive detention in connection with the protests. The police has also registered a total of 800 cases so far. Also, Section 144, which prohibits the assembly of more than 4 people in an area, has been imposed in certain parts of the state. And with that, it is a wrap on this edition of Reporter's Diary. Many thanks for watching.